Just give me a bit of an analysis on, to what extent rising oil prices, if we don't get anything from OPEC Plus, are going to make things complicated for the Fed.
If you do see a surge in oil prices, that can complicate things because, as we already know, both headline as well as core inflationary pressures are certainly there, with an expectation that they slow down going into 2022. So if oil prices rise more meaningfully going into the back half of the year, that inflationary backdrop will be a different backdrop than is currently forecast.
Good to have you with us, Norman. Just to reflect back on the president's speech there, he talked about jobs over the weekend. He's talking about beating the virus. 67% of the U.S. is vaccinated now. Now, that's less than the target of 70% that the president himself set on July the 4th. How concerned are you that Delta variant rises? There's an insufficient coverage across the states in the United States of America, and that is what anchors bonds at the 1.4 to 1.5%. A lack of herd immunity and a Delta variant globally rising?
The Delta variant certainly is a concern right now, but at this point, we're cautiously optimistic, mainly from the standpoint when we look at the UK data, which has been grappling with Delta for a bit longer than most other countries in the West. Hospitalization rates aren't coming up to match the new case rate. And so you're getting new cases, but perhaps we can say they're not as severe as during previous episodes. And so that may signal that any type of lockdowns can be more moderate in nature should they be needed as Delta progresses.
Norman, the other thing to watch are the money markets, and there's an article trending on the Bloomberg with our global audience that is from Zoltan Boshar, who is from Credit Suisse. He warns of trouble ahead. $1.3 trillion worth of money is going to be changing hands. He writes, we're looking at a summer where large amounts of money are going to be getting switched around. The liquidity posture of the lender of next to last resort and the buyer of last resort will thus change. None of this is an issue for the banks in discussion, but it could lead to events in the markets. FX swaps, long-dated treasuries, and MBS that they backstop. Are you buying any protection ahead of potential summer of volatility?
Yeah, we think this transition that we're seeing in the policy backdrop does have the capability to bring volatility, as we've talked about earlier, the oil markets, but now also into some of the money markets going forward. So we do think some protection is warranted at this point as the cycle transitions.